Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're just going to do another Velocity Banking review. But before we get started, I just want to talk about a mindset that rich people have that non-rich people don't understand. You see, a lot of times when you go out into general society, people think, wow, it's so great if I could save, 3 to 6 months of money in an emergency fund in a savings account, right? And in fact, if you actually just do some simple Google searches, the biggest financial corporations on the planet are telling you you need to save money, right? Bankrate.com, I think that's sponsored by the biggest banks in the world. Top 7 reasons to save your money. Let me scroll down here. PNC Bank, benefits of saving money. HSBC, why saving is important. Top 3 reasons to save money by Discover. Our friends at Discover want us to save money. Why is that, right? Yet, if you just do another simple Google search, you'll see plenty of articles about why rich people hate saving money or hate money in savings accounts, right? They prioritize investing for growth. Millionaires hate losing money to inflation. Um, why rich people don't save money and you shouldn't either, right? So, yeah, there's plenty of reasons why you don't save money. Okay, you don't need to save money, and that's what we're going to talk about here today with Velocity Banking. So, we're going to do a rich person scenario. So, $15,000 a month after tax. And we're going to have $14,601.54 in expenses and just have just a little bit over $400 in savings. Now, that $400 in savings is pretty good for the average American because the average American doesn't even have $400 in savings, I think. Now, if we take a look here, okay, now as a person who literally makes 15 grand a month, having a $400 in savings is a little bit pathetic. But because we make a lot of money, we're the best prime target for the banks, right? The banks, every time we pay off debt, we pay it off quickly, and we have money, the banks always want to offer us more credit, right? More credit. If you don't believe me, okay, take a look at this. Okay, so let me just gonna go right here. And then this is just a screenshot of Chase Bank. Okay. Chase Bank. I don't know if you see this. Let me zoom in. Right. Whoa. Let me zoom in. They were like, I went to the website and they're like, listen, just pick one of these 3 cards to increase your credit limit. I'm like, all right, well, that's what they do. When you got money and you don't have too much debt, they're going to make a lot of offers for debt, right? And that's why a lot of people, okay, a lot of people, as they make more money, they just end up more broker. I don't know if that's even a word, okay, but you know what I mean. And so in this scenario, we have 10 credit cards, an auto loan, a student loan, and a mortgage. Okay, maybe we need to put another auto loan in there. We'll be a little bit nicer. All right, so let's just go ahead and we got one luxury auto, and then we'll just go with practical, another one with a Toyota 21K. All right, let's go ahead and do that. So I'm going to do this, insert one row above. Okay, 21K at, oh, I didn't even do this correctly. All right. Uh-oh, we're going to be in the negative now. Okay. All right, so let's go ahead and do this. And I am going to copy and paste. And are we in the negative? Oh, now we're in the negative, so we can't even save money. We can't even save money, right? So we're negative savings. So let me ask you this: if saving money is the key to wealth, according to these people right here, right? Saving money, top 7 reasons. Um, wh- how am I going to save my way out of this? Right? How am I going to save my way out of this? I can't. I can't. So that's one thing. But let's say I did this 600, and I only got $60 in savings. Can I save my way to wealth? Mm-mm. Mm-mm. We're just gonna attack the debt head on, attack all of it. Okay, and so what I'm gonna do is show that even with the same income and same expenses, when we don't save money, we can go from an insane the low number, like $59, to an insanely high number, right? And the way we do that is by making our line of credit as our main operating account. Main operating account. Remember those words, main operating account. Okay. So let's go ahead and add up the credit card debt that we have. So let's add it up. So it's 5, 8, 15, 27, 37, 10, 35, 12, 18, right? Let's go ahead and add them up. And that's $167,000 of credit card debt, okay? $167,000 of credit card debt. I'm going to move that right here. And guess what? When we move that $167,000 of credit card debt into something called a line of credit, guess what happens here? This is the magic of velocity banking. It's not about making more money. It's about not saving it, okay? And I'm going to go over that, what that means. But let's just do this, and then let's go bam, 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 bam. And then you see here, we literally went from $59.21 in savings to saving no money. We didn't save any money. You see that? We didn't save any money. And then our cash flow is going to be $5,400. How do we go from here to here? Interesting. Okay. So, a couple of things. First of all, did I even give the explanation of what velocity banking is? Well, let me start off with that. Velocity banking is a debt payoff strategy where you throw all of your money into debt. We don't save money, right? And then we're going to pay off all our debt with the help of something called a line of credit. So, what is a line of credit? All it is a financial tool where you could borrow money, pay it back, and then use it over and over again. That's all a line of credit is, right? Financial tool where you can use your money, pay back. I'm sorry, use your money. Yeah, use your money, pay it back, and then use it over and over again, right? And so a credit card is technically a line of credit, but it's not the only type of line of credit. There's personal lines, home equity lines, there's business lines, right? Each for their own intended use. And a lot of people think that the credit card is like the only type of line of credit out there, but it's not. You take a look at this right here, my $280,000 home equity line of credit. Home equity line. What does this mean? It's just I have access to capital. I could just go to the bank's website, click a button, and they'll dump up to $280,000 at a 7.5% interest rate. This is from Credit Union. Credit Union, right? All right. So this was possibly me when I first had access to it. Felt like I had access to the Infinity Glove and I could just snap away the debt. And then you can see here that I don't save money, right? So the way that this works is that you're just dumping all of your money into debt, getting rid of the debt, right? Instead of just trying to save money. Okay? All right. So, now we understand how the rich people think. And I, as a rich person, or as a person who pretends to be one on YouTube, I just simply don't save money. Okay. So, all right, let's go ahead and do this. And I am going to do this. So to get the next month's balance is based on the previous month's balance interest minus our cash flow, 5405.04. And then what we do is we take the interest based on the average daily balance, multiply it by the interest rate, and then you divide by 12. Okay. All right. So let's go ahead and copy and paste. Copy and paste. And then we're going to see that in 35 months, all of that credit card debt is gone. Okay. 35 months. All of that credit card debt is gone. Beautiful. Beautiful. All right. So 35 months, 167K of debt. Okay. So now, what's next? Well, the next thing is we got these 4 loans, right? And so luckily we got this loan calculator right here where we literally can just type in the month and then figure out which ones to pay off. Do we pay off these 4% loans, the lowest interest rate ones? I'd be like, that's ridiculous. We got to focus on the 7, right? Focus on the 7 because this is the highest interest rate. What we're going to focus on is paying off these because of something called a cash flow index, right? So all this means is it's like a ranking system. The lower the number, that's the one you want to pay off. And if I pay this loan off, okay, I get much more in terms of cash flow than I would paying off the $665,000 loan or 30-year mortgage, right? That's all that means. Okay. So it's okay to ignore the interest rate. A lot of people will focus on this one and then be like, hey, let's focus on the mortgage, right? But let's go ahead and focus on these because we get more bang for our buck in terms of cash flow. So paying off what 31,000 to get about 1,400 bucks in our cash flow, right? So let's go ahead and do this. All right. All right, let's go do that. And I am going to sum it up. And it's 31 grand. 31 grand. All right, let's go ahead and do that. All right, so now it's plus 31755.36. And then let's increase by our cash flow with these two auto loans. You see these two right here, these two. These now go to zero because we moved the debt into the line of credit. And then now our cash flow is about 6 grand, right? So let's go ahead and what do I do here? All right, so I'm going to do this. Whoopsie. All right, so minus 6731.03. All right, and then I am going to do this one right here. And then we see that in 40 months, we paid off all the credit or the car debt. All right, 40 months equals 167 plus 21 plus 51. And that's going to be 239K. Bam, bam. And then let's go ahead and do this one right here in month 40. 40, 40. So this is now 0, 0. All right. So now let's go ahead and pay off the student loan. One thing you just got to be remember of this. Yes, this line of credit interest rate and the loan interest rate, the spread does make a difference. So the bigger the spread and the higher that cash flow index number, you really don't want to move into a line of credit, right? Just be aware of that nuance. And you can just kind of do some comparisons of how much you would overpay if you did move it to a line of credit. But you don't always want to do that. All right, so let's go ahead and move this 148. I'm going to do that. And then this is going to be 0. All right. Hopefully we're a doctor or something for making this amount of money, right? So let's go ahead and do this. All right. So plus 148,112, and then subtract 9053.2. That's our new cash flow. Okay. And then we see that it pays off in 57 months. 57 months. Okay. All right. So now 57 months. 439K. 439K. And then in the mortgage, so let's go ahead and do 57 months. All right, so now our mortgage is $641,000. Okay, $641,000. So at this point, we could either say, hey, we're okay with just leaving it as is or invest in real estate. Let's just pay it off. Let's pay this sucker off. And then we'll have an extra $3,000 back in our life. Now, one of the things that's really tricky is people don't understand the true cost of a mortgage because they're just looking at the monthly payment. But if we go to the full term, 360 months, which is 30 years, right? Look how much interest we paid. $576,000 on a 4.5% mortgage, right? So that's like almost more than 50%. More than 50%. So I can't believe that so many people, they get really antsy about 10, 20 grand on spending it on real estate when they're buying it, but they don't mind paying like 50 to 100% interest to the bank over time. Like, I don't know how that works. You know what I mean? I literally don't know how that works, but that's what people do. All right. So you take a look here. And then, yeah, I can't, I can't believe it. All right, let's go ahead and pay off the mortgage. All right, let's do that. Give me one moment. Okay, so we got the velocity banking calculator here, where all we got to do is literally just type in some numbers and then it'll just spit out a payoff. And so I'm just going here. All right, so what is our income? Actually, let's do the mortgage information. So it's 4.5%. And the payment amount, what's the payment amount? It's 3546.8. 3546.8. And then what's the original balance? It is, I don't even know. Oh, 700,000. 700,000. All right. And then what's the current balance? It is, I don't even know. What did I put here? What month we're at? We're at month 57. That's where we're at. 57. All right. So 641,541.32. So 641,541.32. And then what is the income? The income is 15,600, and then our expenses is about 3,000, right? So 3,000. And then what's the chunk amount? We'll just say 16 grand. So paid off in 4.8 years. Now let's move this whole thing into a line of credit, and then you see that you pay almost double, right? So you don't want to put the whole thing into the line of credit. Just do it in small chunks and then rinse and repeat over and over again. You'll save a lot more money. So you don't want to do that. All right. So this is now 0. And then how long did it take us? 4.8 years. So it's 57 divided by 12 plus 4.8. That's 9.55 years. And we are completely debt free. 9.55. Not bad. And we did it all by not saving any money. We didn't save it, right? And yeah, that's why I said I just don't, saving money really is just helping the bank, in my opinion. And if I need an extra $1,000, $2,000, well, I just get it from the line of credit, right? So if let's just say I need an extra $2,000, right? So plus 20000. Okay, did it really affect my payoff time? Maybe by a month at max. Actually, same payoff time, 35 months when I first paid off the credit cards. So no need for me to save the money, I think. Actually, yeah. All right, hold on one second. Yeah, whatever. I don't even know what I'm doing with this. But yeah, so even if I had an extra $2,000, I pull it from the line of credit, but I'm gonna be intentional about not saving money, and that's how rich people think. And I'm either rich or pretend to play one on YouTube. And I hate savings accounts. Well, I don't hate it. I consider it to be like an entry fee into getting into a credit union because almost every credit union I've joined has been like, you need a $5 savings account. And then once you deposit the $5, you never have access to it back again until you close the membership. Okay, well, that's it for today, folks. This is a Korean Atlanta. Why did I say A? This is Korean Atlanta mentorship. I'll see you on the next video.